I've talked to dozens of millionaire traders and they've all shared with me different ways that have helped them dramatically increase their performance. And here's what they are. On my show, Be the Trader, I interview successful traders every Monday and Wednesday at noon. Quite frankly, it's been a blessing. I've been able to meet so many different people and get to be in their ear and understand how they think. So I want to share with you some of the ideas that I've picked up from multiple traders, and maybe they can help you grow your account. The first idea that comes to mind is the idea of just take your loss and move on. Don't worry about it. All the traders that I've ever met in their own way, they all just take losses on the chin and continue to push forward. In fact, most of the conversations I have with them behind closed curtains, they're like, yeah, I just took this loss, or they beat themselves up jokingly about like, man, I just can't believe I took this dumb trade and I took a loss. It happens. It happens to all of us. That made me think about how there are a lot of successful traders who still take big hits, but it doesn't destroy their mindset. In fact, they may take a step back and not trade for a week. Maybe they won't trade for a day, or maybe they just downsize. And some are really, really good mentally, where they'll just continue moving forward, but they won't double down or anything like that. They just continue and take the hits on the chin, as we discussed earlier. It goes without saying, if you go look on any chart, go to Twitter and go look at any trader you admire, look at their charts. They're usually beautiful execution. Every trader that I've met, they're not telling me like what they're happy about, how much they made and stuff. They're happy about how they execute. They're always focused on, did I execute my trade well? Did I stick to my plan? Did I have a plan? Was it a good thesis? They're all focused on that. So you should too. When I think about trading well and execution, that also means constantly evaluating your thesis. That's one thing they always do. When you're in a trade, the trade is always moving. It's active. Risk is evolving. So you always want to make sure you reevaluate your thesis. Is it still doing what I think it should? If not, maybe tighten up your risk. If so, stay on the trade. Speaking of stay on the trade, they let the trade work for them. If they're in a good trade, they're not just going to cut it right away for profits. That old saying of you can't go broke making a profit, you sure can. You know how? Taking bigger losses than you do on profits because you're scared. You don't want to give back profits. You don't want to take a bigger loss. You want to make back your loss, so you take your smaller profit. It's just a cycle that you're probably in right now, and you're probably like, yep, I get it. Yep, that's me. That was me too. You can't go broke taking a profit. So make sure if you're going to take a profit, something that's helped me a lot with this idea. If you look at my charts on Twitter, you'll see that sometimes I'll take profits right away. But what I've gotten better at is I used to be like 25% profit or 30. Now it's like no more than 10% of my size am I taking a profit for a small bite. And it's just to scratch that itch that we all have as traders. I just made that a rule for me to help me continue to grow, and it has dramatically helped my results. Now I can stick to a play with the majority of my position for the move. Because if you can stay for the move, then you can become consistent. Another idea that I think will be really helpful for all of you, even though some of them don't use indicators, some of them do. Some use MACDs. Nuts. Got it! Some use RSIs, some use SMAs, VWAP, right? However, one thing they all have in common, for the ones who don't use anything, is they all focus on support and resistance. They all do. They might have an indicator, but they're still looking at those key areas of support and resistance to help them with their planning. When you're trading next time and you see a great play, remember that all these traders I'm talking about, they size into plays. And you might be scratching your head like, well, I can't do that, I don't got a big account. Yes, you can. You can do it. You just gotta do smaller position sizes. And understand, this is my opinion. Of course, everything I say is my opinion. But from talking to all these traders, what I've learned and what has helped me a lot is sizing in helps me figure out if I'm right. Because I'm sizing into a play that's working rather than a play that's not working. Whereas other people, I'm guilty of it, is we size in when it's going against us instead of when it's going for us. So think about that, because it could dramatically change a 1-hour play to a 3-hour, 4-hour play, or a 3-hour play to a 6, 8, 9-hour play. And that's very important. So you could just focus on one setup instead of 18 trades. You could just do one trade and really hone in on that and squeeze as much as you can if you focus on sizing in appropriately. Another idea that comes to mind when talking to all these traders is they view stops as areas or zones. They don't just think of it as, okay, at this line, I'm getting out no matter what. There's some occasions that you do, sure, but there's a lot of occasions when you don't, and you want to give it some room to breathe. How I do that personally is I have that in mind before I take my position. So I size in appropriately so I can take that wiggle room. Every stock is unique. Every stock is different. Some stocks stick to beautiful trend lines, beautiful support resistance. They follow setups to a T, so you want to have tight risk. Where some are very choppy, like Tesla can be. If you ever trade Tesla, you know it can just wick. So have that in mind and know with Tesla, I may need to have a zone. Whereas with another stock, I may need to be tight. All of the traders I've talked to, they don't care about how much they made. They're not impacted by those trades. But when they do get impacted, they acknowledge it because we're human. Yeah, you can get excited when you do well and you have a great day. They don't allow that feeling to come into the next day of their trades. And if it's still there, they're aware of it and they allocate their position sizing accordingly because of it. That's something I started to implement. I celebrate when I'm doing well behind the scenes because why not? Like, we work really hard. But now, instead of coming back to the market the next day and then losing it all because I was so happy, I'm acknowledging that and maybe downsizing a bit.
Slowing down.
It's helping me continue to grow. So that could be very helpful for you too, especially if you have a home run. One thing's for certain, they all focus on what they are good at, period. I'll trade something, they're like, I hate that. They'll trade something, I hate that. This guy will trade something, this guy would trade something, this guy would trade something. They all hate each other's trades, but they all do well. And that's because they focus on what they're good at. And this goes into the idea of, right here, it's you versus you. When their confidence is low, when they're feeling down, when they're feeling sick, like I've been sick all this past week, I trade smaller. They downsize. Maybe they skip the day. I do the exact same thing. It's been so helpful because we're not feeling confident, because this is a big confidence game in trading. If you don't have confidence, you're gonna trade poorly. Be aware of that and make a rule to help you stay consistent when you're not feeling confident. One thing's for sure, all the traders I talked to, they all started with different account sizes. From Trevor with $500 to some with just $1,000, some with $25,000. They all started somewhere. So don't worry about where you start. They also all have that one give me setup that makes them perk up and like, yo, I need to be at my computer because I'm gonna nail this trade. That's their A++ setup that they're hoping they see every day, but only comes once every 2 weeks, once a month. So whenever you get that feeling, there's a lot of feel in trading. When you get that feeling that you're like, oh my goodness, I love this setup right here, don't pass up on it. Instead, start thinking how the pros think. How can I take a little more risk on this play because the odds are significantly on my side and it doesn't happen as often and the risk reward is very in my favor. Every trader I've talked to on my show, they all review their trades, whether it's the end of the week, the end of the month, or the end of the year. Very rare, some will do it at the end of the year, but they've been trading for like 10 years plus, right? Some do it every day to this day, but they all review and they all review differently. Some just upload the trades to TraderView or some kind of website, some journal manually, some write in a journal. What they are doing is making sure that they're constantly sharpening their pencil. They're constantly trying to grow, trying to figure out how to improve on their next trade. They review their good trades as well as their bads. How can they improve those? How can they eliminate these? Now, one thing they all do is they take breaks when necessary. So make sure, don't punish yourself and be upset when you take a break. Be happy. Because when you really feel that you need to take a step back, you know, you feel it, but you don't do it. Because you're like, I don't want to miss a day because then it'll take me further away from being successful. No, it won't. Not taking a break is going to take you further away from being successful because you're going to keep on making mistakes. Listen to your gut, like all traders that I know do, and take that break. Now, I want you all to know, and hopefully this does not get ignored. Not every trade deserves the same risk. Every trade is different. Every trade is unique. Every trade sets up differently, has a different probability, has different odds. I don't care if it is your A+ setup. Your A+ setups are all unique within themselves. Your A+, they might have subcategories of A, B, C as well. Find out what those are and make sure you allocate the right and appropriate risk for each one. You don't want to allocate a small risk to a really high odds, great risk reward trade and the exact same risk to a low odds, very low risk trade. Like, it just doesn't make sense, right? Think about that and do some homework. You're not going to know the answer right after watching this. Study and make it happen.